Hi guys, so if you're just joining us, do well to watch the previous videos from day 1 up until day 28. This is a full-blown lecture, and the essence of this call is to just talk about, but the essence of this 30 days bootcamp is just to talk about the very important things, right? It is not really a mentorship course per se, because there are certain things that I don't really go deep down because it will take a lot of time. So this lecture is mostly to help the paid student to just, okay, this is the finishing touch you need to get, right? And those of you that have learned one or two things about trading, and you want to just make some final touches, this is where this bootcamp comes into place. But for you to get the proper understanding from the foundation, you have to come to, if you're not part of the paid mentorship, then you have to join, because that is where everything has been organized. For instance, like I've noticed that most of these teachings were not really organized as they should be. Right. I'm just talking about the important things I think I need to talk about. So I'm just talking about important things, right? But if you want the organized lecture, the organized mentorship, where you can ask questions, where you can have live trainings, where you can have access to our recordings, because this academy has been running since 2021. This is our second year. We are 2 years and about 5 months or thereabouts. If you want to get all our recordings right from the day one, all our teachings, most of our teachings are on Sundays, and some of them are only 1 hour, sometimes 1 hour and some minutes, very in-depth teachings. If you want to get those in-depth teachings, you want to get those recordings, you want to get the lecture, right? Everything and in details, then you have to join the paid mentorship with the link in the description, right? Apart from that, if you feel that you're okay, then no problem. And you can also always get the Profem blueprint with the link in the description, right? The Profem blueprint is for those that are using, that want to use the Profem account. Those that want to trade with Profems, right? You have to use the link in the description to get for the price doubles on the 1st of November, right? Just for Profems, how to approach Profems, because trading on your private account is not the same thing with trading on a profit account. There are two different things. The equity, the emotions, the approach is quite different, right? Then you have to get the profit blueprint, whether you're in a paid mentorship or not. That blueprint is different. There's some, I talk about profit with just only profits, right? So if you want to get that, use the link in the description as well. And let's go into today's teaching. All right, so today's teaching is just about lower time frame confirmations, right? How do you confirm a trade, right? So how do you, okay, the market has come to a point of interest. Okay, how do I enter a trade? That is just the topic for today. How do I enter a trade? All right, so lower time frame entry. So talking about a lower, you have to learn how to make lower time frame confirmation entries, right? So else, in my paid mentorship, I talked about four of them, right? But for this particular class, okay, in our new, we are opening up we are rebranding our course on the 1st of December. So I'll be giving about 6 different entries. But for this free teaching, this free YouTube mentorship, I'm talking about only two. And for the benefit of those in the paid mentorship, I'm adding one that I've not touched them. So I've touched them four, so I'm adding one that I've not touched them, and then one I've touched them. So if you're in a paid group, this will be of an advantage to you, because I'm teaching in this teaching one entry I did not teach you guys, which I'm supposed to add in the 2023 rebranded course, right? So I'm teaching one entry I've not taught you guys, and I'm teaching one that I've taught you guys. So out of this seven, because to be seven now, it's about seven confirmations now. To be seven, I'm giving you guys, but I'm picking only two, right, for this teaching, right? I was picking the simplest ones. The other ones are quite kind of complex, right? But they're very nice. I was teaching the simplest ones, right? And the simplest ones are um, the change of character with. So this is the first entry of talking about change of character without inducement, right? That's the first one. I think I should copy this out. It's going to be a very interesting lecture. Right. So this is the first entry. think I should. Okay. All right. So let's do that way. And I think I should separate this, put the line in between. Then put on the right, change of character with inducements. Right. With inducements. So change your character with inducements and change your character with inducements. So they're just the one I'm talking about. So I taught you guys a lot of entries in the payment, which I'm talking about a lot of them, but I'm not teaching just one. I think what I've not taught you guys is this one, the one with inducement. So it is going to benefit the paid students. If you are a paid student, you're going to benefit from this because of this particular one. Why, if you're not a paid student, we have about 4 others that we use. So I'm talking about only two. This is why you need to join us so you can get access to the full package, all right? So now let's talk about so the change of character of investment is simply you mark your point of interest, UI. So the market comes to your PUI and then does what? Breaks to the downside. So when the market does this, does the effect as what? Your break or structure. So you have what? A change of character. Right? So this the break below this swing below is your change of character, right? That's your change of character. Let me make this red so you know understand. Let me make this red. Right. So market has gone below that swing below. That is a change of character. So in this scenario, you simply extend the last push up. You extend this last push up, right? And then you take your limit and put it was either at the imbalance or the other block. So this is an issue many people have. Should I play imbalance? Should I play other blocks? There's no specific rule to that. There are times in which price plays imbalance, and there are times in which price plays the other block, right? So that is just it. You cannot really anticipate if price will play the other block or to play the imbalance. Sometimes price chooses to play the other block. Sometimes price chooses to play the imbalance, right? So price can choose to play the last up candle. You can choose to play the imbalance. So it depends on what the market wants to do. So that is basically it. This is your higher time frame point of interest. Your higher time frame point of interest. And your higher point of interest can be any of the things I've mentioned. Watch the previous teachings. So it could be the institutional candle, it could be the higher time frame imbalance, and it could be the other block. So I taught you guys 3 POIs. So the 3 higher time frame points of interest are number 1, the other block, number 2, the imbalance, number 3, the breaker block. There are others which I did not mention, but those are the 3 basic ones which I mentioned. I didn't talk about smart molecules. I didn't talk about mitigation blocks. I didn't talk about flip zones. I didn't talk about those ones because those ones will be taught in the paid book, right? But for the sake of this code, I just 3. And these are the 3 common ones, right? Even if you don't know that, these 3 are the most common: the imbalance, the other blocks, and that's right. So this is it. The item of interest, you wait for the break and then enter either the imbalance or the other block. So this could be an imbalance. This is what I'm so now you're not reducing your stop loss. So this is the purpose of this. So you're not reducing your stop loss. So instead of putting your limits, your stop loss all the way up above the height of the place, you cannot reduce your stop loss and place it here. So that is the purpose of lower time frame entries. Stop loss reduction, right? So this has reduced the stop loss being all above it. You cannot play with this. And note, lower time frame entries, there is no specific time frame. You're the one to backtest and choose the one you think that you should be using. For instance, now there are pairs I cannot use 1 minute for entries. Pairs like GJ. I can't use 1 minute for GJ. I like using 5 minutes because GJ can give a lot of weeks. So you have to backtest it there and know the particular time frame and gives the best confirmation. Something like EU now, I can use 5 minutes, I can use 1 minute, but I like to use I prefer the 5 minutes for EU. I can I can comfortably go with 1 minute for GU. So it just depends on the pair. Some pairs don't really respect 1 minute so much. For pairs like indices, like the Nasdaq, US 30, they can respect even a 15 minutes, a 15 seconds chart. So it depends on the time frame and it depends on what you have studied. So there's no specific rule on use this time frame, use that time frame. But know something that a 5 minutes break or structure is more significant. A 5 minutes change of character is more significant than a 1 minute change of character. So for you to really confirm, you might want to just use 5 minutes. Just for as a beginner, I recommend that you just use 5 minutes. Don't use 1 minute as a beginner. It's best to use 5 minutes or 15 minutes. As if you're just beginning, right? You're not really sure what to do. You can just use 5 minutes. But once about 5 minutes, that sometimes you miss the entry because it will appear 1 minute. So sometimes you miss entries for using 5 minutes. 1 minute will actually give you the entry early and you see it early. But 5 minutes, sometimes you might miss it. 15 minutes, you might miss it. But when you sit on 5 minutes, it's more probable to play out. So the likelihood of the 15 minutes and 5 minutes playing out is higher than the 1 minute because market can just take you out of 1 minute and then come break again. So it happens a lot on 1 minute. And you see markets give that change of character and then you try to sell to take you out and then now break again. Now it will now break again before finally moving. So it happens a lot, right? So that's basically why I say that if you're just beginning, study the pair that you're trading and then use the one that you are okay with, right? So now let's talk about the second one. So I just gave you guys based on higher time frame interest. So there's also another one which we use, which is called higher time frame liquidity sweep. No, I can't really go, but those things are really, it's going to be very cumbersome trying to talk about those things because there are also times in which we enter trades based on sessions liquidity sweep and higher time frame liquidity sweep. So that those things I'm discussing it in the paid mentorship because those things will take me a lot of time to start explaining when you should. So, but for this call, I'm just focusing on the higher time frame POI. So we also have the higher time frame liquidity sweep. We have the intersection liquidity sweep. We have other ones that we use for confirmations to take trades, right? But for the sake of this call, just focus on the three things I mentioned: other blocks, imbalance, and breaker blocks. Those are the three popular ones, right? So for the liquidity sweep example, I've taught the base students that one, and that's something that I'll also be talking about more in the new paid mentorship, right? So let's talk about the second one. Second one is also similar. You can see how I can do this. You also have your higher time input of interest. Remember, it could be an imbalance, an order block, or anything at all. So it could be an order block, imbalance, or a liquidity sweep on higher time frame. So you can just replace that with liquidity sweep too. So it's just almost the same. So now for this example here, you have when markets come into your POI. Okay, markets comes to your POI, makes an inducement, and then comes to your POI. So this is it. So in this example here, you're targeting just above the inducement. So this is this one. So this example, the inducement is what? The first pullback. Remember I told you guys about inducement. I remember I told you guys about inducement. So now you have your inducement here. This push up. That's first high. This first high is your inducement. So in this example, you wait for the market to give you an inducement and then you take a trade. So inducement entry is required when the uh, the distance between your POI and the break is large. Let me explain this. So let me say the inducement entry is required when you can see that the order block or the imbalance has not been mitigated and then price forms a high before getting there. So this high before getting there is what refers to inducement. So inducement entry is nice when you can see a very clear unmitigated candle. And I've told you guys how to identify mitigated candles. A mitigated candle is a candle that has an imbalance beside it. That's how to know a mitigated candle. Let me explain again. So now, if you see a candle that just drops, that is not mitigated. But if maybe the market moves like this, so the market moves this way, like markets go up, come down, tap into that candle, go up again, tap. So this the market's coming back to tap into the old candles is what they refer as mitigation. So the market is coming back to tap into the old candle before going down, tapping, that's inducement. But in this case, market will just fall, right? Giving unmitigated candles, which was not tapped into. So an unmitigated candle is a candle that was not tapped into. The market did not come back to run into it before going down. Like there was no wick. Market did not wick into it before going down. So in this one is mostly used when you can see a very clear unmitigated candle, and you can see that there is what that's what a PY, right? So in this one is very nice in this scenario. So in this one is mostly used when there's an unmitigated candle or if there's a balance. But why this one, this change of character can work even without on mitigated candles. So even if it's mitigated candle, you cannot simply play the other block. Doesn't necessarily need to have an imbalance or anything else. Just play the other block or play the 50%. So just measure 50% of the move you play it. So there's several ways to play it. Can I play the open of the candle, the 50% of the candle, the whole move? They have to back test this. I'm not here to teach you the different kinds of alternation to it because it's going to take a lot of time to talk about when you're looking at 50%, take a lot of time to do that. So that is why you have to join the pay group because in the pay group, we'll be breaking those things down one by one, right? So now for this example, this is what we call a change of character with inducements, right? So simply take a sell here. Stop loss will have to be below the swing high, and then exit. So that is basically, so this is the only model you're looking at for when you're looking at for what? Your lower time frame entry. That is the only thing you're looking at for. That is the only thing you're looking at for, right? You only look out for that. So I don't know if I should check the charts. Okay, let's look for just one example. Just one example. So I'm gonna wrap it up. The rest you can back test it on your own, right? So let's just go to the lower time frame chart. Let's look at last week. That is Friday. Let's look at Friday. You see how the markets moved on Friday, right? So this Friday movement. Okay. All right. So okay, let's use this example. Let's just use this example. So now we have where the market was trending higher. All right. So if you look very carefully, we had a kind of key level here, kind of breaker block level here. So this is actually the breaker block level. We had a breaker block here, right? And if you look very carefully, we had this the breaker aligned with this point here. Market was bullish, right? So market opened here. The market opened it was very bullish. So we had this unmitigated candle here because this candle took out, you can see this, watch this. So we had this little imbalance here between this candle formed. We had a kind of PUI there, right? Let me see something, okay. And look at the low of this candle. The low is at, the low of the red candle is at 648. This is at 647. So this candle was not mitigated. So we had this unmitigated candle here, right? That was an unmitigated candle. That was in line with what this breaker block, right? And then we are bullish. Market was making higher and higher lows. So now we had an inducement here. This is what we call an inducement. So we had an inducement entry here. Remember, inducements should form. So we had our, remember our PY was what? This breaker block, or we can use this one here. So that's our breaker block entry. That was the higher QI. Market was bullish. They had our inducement, and the market came to what? The last unmitigated candle. So that is it. But what other way I play inducement is by I just put my limit just this is a very easy way I play inducement. If I'm not really sure where to place my trade, right? I just simply do this. I just simply place my limits just at the inducement and put my stop loss above below. This is how I take my trades too. If I'm not really sure of where market is going to play, I just put my limits knowing that the inducement should get tagged. So I just put my limits just a bit below, just maybe one peak below the inducement. That's what I do sometimes. I'm not really sure if I should play imbalance, but I don't really know where to put my limit. I just put my limit at the inducement, just put my limit there, put my stop below. Yeah, so even if markets has baked me, maybe let's see draw down and then targeting this high. That is basically how to play it. So let's go back a bit for that more. Let's see if you can see another entry. Right, look at another one here. By very clear example here. We had this PY, we had this other block here. Right? Markets came to that other block. What happened? We saw what? A break of structure, a change of character here. So this is very clear one. Markets came below this low. It was a very nice one. There was no inducement here. Market just came and played was this imbalance here. So just this was the imbalance entry. Our market played this imbalance. I see. As that was the entry. So if you're playing this trade, entry should be an imbalance here. Stop loss above the high. So above this and above your stop loss just there. So maybe you're targeting this swing below. Where's the swing below there? Right there. Right. So this will be your third profit. The one is the 1.2. Maybe the F one is the 2, somewhere around there. Right. So that would have been it. That maybe I had to go a bit. Like I really fair nicely. So I'm not using 5 minutes for every. I don't want to go to higher time frame. So remember that when you're choosing a period, you have to go to a higher time frame, like 1 hour, 4 hour daily. So I'm not using one lower time frame because I don't want to go to a higher time frame, right? So that is basically how to make your entries on a lower time frame. So if you want to learn more about this, you want to get deeper information, you want to deal with us for 1 year because our paid mentorship is for 1 year. Imagine being with me for 1 year, learning from me for one full year, right? I think just last week we had the students that withdrew about $1,200 from his profile account. These are the kind of results we have on a regular basis. So you want to have those kind of results. It's not something that you just have to just come and watch for just 30 days and think you have gotten it. You have to be with us for a long time. He has been with us since January this year. Imagine learning under me since January up until October. That's about 10 months. So our mentorship is for 1 year, right? You just pay for 1 year, no monthly subscriptions, and then we can teach you for one full year. So use the link in the description so you can be part of us. Invest in your trading, right? Invest in your knowledge. Don't just come and think I can get successful overnight. Just invest. It's not so expensive. Just we're really running a 20% discount, which ends on the 1st of November. Just join us and you can be part of it. So I hope this was exciting. Tomorrow is the last session of this bootcamp. Have a wonderful day. Cheers and God bless.